Let's talk about what's happening within steel, and let's welcome on board VR Sharma, the MD at JSPL, joining in the show right now. Mr. Sharma, steel prices are strong as ever. There's no taking away from that fact. But tell us, what kind of realizations have you been seeing so far on long products especially? Have we seen a full recovery from the Feb blip?
Worldwide, the steel industry has been passing through a different time. You see, after the lockdown is lifted, the entire world started working as to how to recover their losses. Europe was down for 4 to 5 months. American industry was also down for 3 to 4 months' time. So is the steel industry in Korea, in Japan, and also in other Southeast Asian countries. China, they were down in the month of December, Jan, and February. But from March, they started seeing the V-shaped recovery. And this is what India needs to do now. So India was also down in the first quarter, April, May, June, and part of second quarter. But we have seen a good recovery in demand as well as in overall consumption from September onwards. So I think the entire world is working how to make up. And this is the reason, be it a large organization or a small-scale industry, MSMEs, automotives, infrastructure companies, everybody wants to recover their losses, what they lost during pandemic or during lockdown. And that has created a shortage of metals, steels, and many other items worldwide. Over and above, the shipping costs have gone up, ferroalloys cost has gone up, all other consumables or the input costs have gone up. It is not only in steel, be it copper, aluminium, be it building material products, be it wood or plywood or any laminates, everything has gone up. And this is the reason today world is seeing a great inflation. And I think it will take another 2 years' time to cool down this the entire world. This is a real demand. This is not a hoarding, or this is not the stockist who are stocking. This is a true demand, and most of the demand is coming from the infrastructure companies as well as from major OEMs.
Sure. And the fact that you've posted a 37% jump in the fourth quarter, Mr. Sharma, is clearly a testament to the strong demand in India for steel. However, could the resurgence in COVID cases put that demand momentum on hold?
You see, JSPL's track record in April, May, June, we did export about 80 to 85% of our total produce. And we are geared up to export again if the situation comes or persists. But at the moment, I personally feel that this kind of situation will not come because country is already having vaccine, and government of India has already allowed that all 45 plus people should have vaccine. And there is a great relief. I think within the next 6 to 8 weeks' time, we'll find that overall number of patients or number of infected people will be reduced, and country will not face any further lockdown. It will be most unfortunate if the country faces lockdown, and I feel that situation will not come. Yes, in Maharashtra, it is quite alarming, but government of Maharashtra is taking due care, and so is the central government. The knowledge to handle the COVID and knowledge to find the means are now much more available than what we had a year back. So we are now educated enough, we can handle it, we can control it, and we can definitely treat it.
Okay. You've posted the highest ever steel production and sales with 100% capacity utilized. What's the room for value momentum in FY22 capex plans?
You see, we have reached to a level of 7.5 million ton now. And last year we were at 6.3 million ton, last financial year. And last financial year we were at 5.5 million ton. So a journey from 5.5 million ton to 6.3 and then finally 6.3 to 7.5 million ton is a growth of around 18%. And sales growth is about 20%. As far as the room is concerned for the further expansion or further increase in production, so without expanding, without putting any capex, we feel that we'll be in a position to deliver about 9 million ton from our plants. And that is the ultimate. This is what I can say today. So we still have a room of 1.5 million ton. Hopefully the current financial year will touch 9 million ton. If you see our production in the last quarter, it is 2.07 million ton. If you multiply it by 4 in 4 quarters, then we are already at a level of about 8.4, 8.35 to 8.4 million ton. So with the little changes in the system, little changes in the product mix, little change in the overall strategy, we will be in a position to reach to 9 million ton. This is what we are expecting in the year 21-22.
Okay, and with steel being at those multi-year highs, your FCFs have increased, of course, quite a bit this time around. Is it all being directed to bringing down debt, as that has been a continued priority, to that 15,000 crore mark? And when do you aim to do this by?
It's not too far away now. Look, in last month, that is the month of March 21, we did a sales of 5,300 crores. And we could do the collections, that is money flowing into the company is 5,150 crores. So if we repeat it 12 times in a year, then we'll cross 60,000 crores. But let us not be too much bullish. I'm working on a strategy 15, 15 and 50. That is 50,000 crores of total sales turnover, which I'm sure we will get it in 21-22. And the other is 15,000 crore of EBITDA. I'm very much confident that 15,000 crore EBITDA in the year 21-22 we will achieve. And the next is how to bring down the overall debt on JSPL to a level of below 15,000 crore. So this is also very much in line. So we have aligned ourselves to find out the ways and to chart out the roadmap as to how to reach to 15, 15, 50. If this happens, and this is going to be happen, so we become one of the top 10 companies in the country in terms of overall ratios and in terms of overall debt level and the profitability level. So this is what our aim, to become top 10 industry, top 10 companies in the country across all sectors, not only in steel, across all sectors.
Okay. Lastly, iron ore prices have surged quite a bit as well. But how much stock do you still have at Sarda? And is the price that at which you're procuring, iron ore from OMC lower? And is this really cushioning some of the iron ore price surge for you?
You see what is happening today. The whole world is buying. Be it iron ore, be it scrap, HBI, DRI, pig iron, all metallics, ferroalloys, each and every consumer, customer, steel mill, or any other metal industry, they are in the buying mode. And why are they in buying mode? They are not holding something. They are not stocking. Each and everybody is consuming. This means there is a demand. You have seen that 1,23,900 crore rupees is the GST collection last month. So that is a very positive news. So what do we feel? That GST must reach to a level of 1,50,000 crores in the month of May. This shows that there's a huge demand. It is not only a pent-up demand. There's a demand which is realistic demand. And this will definitely increase the input costs because it is a chain, it is a cycle. So when the consumers, they go on a buying spree, then finally the complete value chain behind and value chain downwards, it is always affected. So, and we cannot control it. The whole world cannot control it. You have seen what has happened in the Canal Suez. For 2 weeks, the entire world became at the halt, and trillions of dollars of the total volumes they were stuck up in the Mediterranean Sea and also in the Arabian Sea, and this has disrupted the entire supply chain of the world. More than 70% of the world movement that is taking place from the Indian Ocean, and the Indian Ocean was affected very badly, very adversely, I would say. So the point here is, when the raw material prices go up, when the demand goes up, when the buyers are confident on the respective economy of their country, then these prices are bound to increase. Most of the developed countries, they have already declared a lot of stimulus packages. So America has done more than $3 trillion. China has done more than $5 trillion put together. So in Japan and Korea, they have declared trillions of dollars in terms of stimulus package. Indian government has done much more than many of the world's economies. So more than 30 lakh crore is going to be spent to give a boost to the industry in terms of infrastructure, in terms of supporting MSMEs, in terms of supporting manufacturing sector. So I think the time is there to give a big boost to the manufacturing sector, and manufacturing is the base for any economy in the world, and this is likely to happen. So the prices, incoming, outgoing, there's no control as of now. We definitely try to be very, very reasonable. We try to be very, very customer friendly, so that our customers, they do not feel a hit in terms of prices. Raw material prices like iron ore, you asked the question, OMC, NMDC, private miners in the vicinity, that is in Odisha and Chhattisgarh, they are exporting full. There is no export of iron ore today, barring a very few low grade of iron ore which is being exported. But otherwise, situation is under control and the raw material is available.
Okay, Mr. Sharma, good to have you on the show. In fact, on that note, we're going to wind it up in this edition of the market. We've picked up slightly, 14,780, and the breadth is looking stable so far in favor of the advances. It's a good buy then from Abhay and me.